I'll record. All right, guys. So welcome back to another training for the money mantra. Today, we are going to be talking about high frequency trading, which is a faster version of trading Forex. The main difference I like to say is Forex is distance based. You guys know we work off of pips. So the further the market goes, the more money you make. And HFX is time based trading. Now, HFX is exhilarating. It's fun. It's nice. But if you think that trading Forex or trading stocks or cryptocurrency requires patience, then HFX, even though it's fast paced, it requires more patience, more discipline, because you're literally analyzing the market by the minute. Some people analyze the market by the week, like our friend Joe. Some people analyze the market by the day, right? Some people analyze the market by the hour. And with high frequency trading, you're analyzing the market by the minute. Now, a lot of you guys here already have some understanding about trading, but I hopefully am going to make it even simpler, with just how I trade HFX. So, of course, this is going to be a learning session, but it's also going to be an opportunity for y'all to make some money. I always recommend, if we're doing the training, that you use your demo account, but I can't tell y'all what to do. So of course, if you do make money and the trade goes in your favor, you can just drop a cleared. If the trade doesn't go in your favor, it's not a loss, it's a lesson, because every L is a lesson. Now, again, I always like to do a very basic overview, just to give you guys a review, or I may just say something that you didn't pay attention to or didn't notice before. So of course, we're using pocketoption.com. Pocket Option is a free website that you can use. It's been around for a long time. But they've also added some updates, which are very helpful, that just really makes the trading easier for you. So firstly, if you want to look at your trade in real time as it's going on, you have all these buttons over here. And again, I'm not going to spend more than 5 minutes on this review, but it's always new to somebody. So you have these buttons over here. They can either be clicked, they could be gray, or they cannot be gray. So I like to keep the trade one open just so I can see my trades. Because, for example, if I get into a trade for a buy, oops, I didn't mean to press that twice. But if I get into the trade for a buy, I can see everything that's happening with my trade right here. And if I click on it, it tells me where I got into the trade, where the market currently is, and how many points my trade is in profit or out of profit. So right now I can see that my trade is in profit. I got in at 855, because when we do HFX, we only go by the last 3 digits. And we can see that the market is currently at 886. Well, now it's going even higher, and I'm essentially 37 points in profit, which is good. Now, the great thing about HFX that's not like Forex is the market only needs to be 1 point, right? It only needs to be 1 point above your entry in order for you to make money, right? No matter how far this trade goes, if it goes up 5 pips, 6 pips, or 700 pips, I only need 1 pip to clear. And so far, we're 60, 73 pips above our entry. This trade is going to clear, and our balance just increased by, it looks like, I don't know, like almost $100, right? So it's nice to be able to see what's really going on in your trade, because HFX, you really will be clenching your teeth, because all you need is 1 point, right? And as you guys can see, I didn't do any analysis on the last trade. I simply clicked the button to make money, which is good, but it's nice when you can know when to click the button and when to make money, because this is really not a game of luck, like, or chance. Is calculated. There's strategy involved, but of course you can get lucky. So if you just want to be a button clicker, hey, that's on you. You can still make money that way. But if you want to do this long term, you want to start to compound your money and grow your money, then it's nice to know, okay, I need to make this much in a day. I need to take this many trades to make my goal, or however it is. So again, with this style of trading, the shortest time you could be in the trade is 5 seconds, but I don't recommend that. You can play around with it just to see how quickly you can make or lose money. But that's too quick. Like, the example I always give is, if you went to a restaurant and somebody gave you a menu, if they said you got 5 seconds to choose order, you would be like it's just too short. But if they said, okay, I'm going to give you this menu, I'll be back in 5 minutes. I'll give you a minute to think about it. You would say, okay, it's a little bit more time to get your thoughts together and figure out what it is you want to do. So it's the same thing with trading. So for my sessions, I like to trade on M1 just because when I first started trading HFX, that was the lowest time frame. And I figure if I can do this in 3 minutes, I would get on live sessions with other educators. If I can do this in 3 minutes, then who's to say I can't do this in 1 minute? And I think that I became really good at it just because that's what I practice at. Because anything you practice at, you can get better at. It's just that simple. So for this session, you can have your time on 1 minute if you do plan to take trades, or you can have it on 3 minutes. If you feel more comfortable with either, or it's up to you, but I will be doing it based on 1 minute trade ideas. So again, your amount, this is another thing that's really good about HFX. You know exactly how much you're risking right off the bat. So if you don't want to risk more than $100 a day and you only want to take 5 trades, then you know that you should only put in $20 per trade. You shouldn't put your whole $100 in one trade because that literally doesn't make any sense. So you can trade, and this isn't something we talked about too much with HFX yet, but you can trade the same amount every time. I know when I first started trading, it would just be $5, $5, $5, $5, $5, or you can actually compound your money. And I guess I'll do that as we go along, or you can compound your money and you can come out with a lot more than you started with. Because let's just say you get into 5 trades, right? And I'm gonna have to pull my calculator out for a second. Let's just say you get into 5 trades and you risk $5 each, and then all the trades clear. Okay, you're making about, let's just say, $25. But if you make $5 and then you put in all your profits and then you just keep doing that, you'll walk away at the end of your session probably with hundreds of dollars versus 25 because you're compounding your profits, right? So I'll try to do some examples as we're going on. So make sure that whatever risk you choose for the session is just appropriate for your account. If you know that you can only risk $1, that's fine. Like you're still making money by only clicking a button. Don't try to risk all of your money in one trade. It doesn't make sense because this is a way you can multiply your money, but you can also lose money very quickly. So just be mindful of that. When you choose your currency pair, of course, you want to make sure, well, now it's at least, I would say at least 80%. Because most of the currency pairs on Pocket Options stay at 92, which is good. So just find a pair that you're comfortable with. You can jump around because it is so quick. With Forex, I think it's more important to actually get to know a pair. How does this pair move? Is it volatile? Is it steady? Does it move quicker in the morning? Does it move quicker at 2 p.m.? Do you tend to get stopped out a lot more before the trade actually takes off? With HFX, it's a little bit different because it's moving so quickly that you can honestly come in here and profit off of any of these pairs. When I'm trading for myself, I'll literally just start from the top of the list, AUD, CAD, clear some trades, move to the next pair, clear some trades, move to the next pair. I'm not really locked into one pair with HFX because you don't have to be. It's so quick. As long as you can recognize the patterns, then you'll be fine. So again, we're going to start for this session, y'all. You can go to AUD, CAD. And then once you actually get to that currency pair, you can just drop AC in the chat or drop some 7s. Just so I know everybody is on the same pair. Okay, awesome. Hi, Kayla.
Hi.
Hi. All right. So I'm just waiting for everybody to get here so that we can pretty much move on to the lesson. So I see one person here. I'll give you guys about 15 seconds. Okay, awesome, awesome, awesome. Thank you guys. All right. Now HFX, just like Forex, you are going to want to trade with the trend. So that's what we're going to do. First, we're going to just zoom out a little bit, right? And you guys can write this down or you can just remember, like it's pretty simple. We want to figure out which way the market is going. Because sometimes the market, the market is obviously going down like such, which I think right now the market is pretty much going down based on the shape. So when I'm doing HFX, the first thing I want to do is I want to establish what the ultimate trend is. And it looks like this market is going down. Now I can tell that because of the shape, like it clearly looks like a slope. And then also I see more red candles than blue candles. So it's like a few different ways you can just figure out, okay, is this a buying market or a selling market? So based on what I see right here, this is a selling market. Now, this is going to sound redundant, but it's important when it comes to trading. When the market is on a downtrend, you have the market creating these higher lows, right? I mean, lower highs. And that is important, right? This was a high, but then the market dropped and then it didn't get any higher than this. So this is a high. We're going to say this is the high. And we're going to say this is a lower high, right? And then as the market goes down, and then this is a high, right? And then this is a lower high, right? And we're getting that because the market, as it's dropping, is having a hard time to push back up to a previous high. So yeah, it's still a high for the section, but it's a lower high. And that's very, 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 very important, because if you're looking for a sell in a selling market, right, and the market's consistently creating lower highs, then you would know that your entry point should be where there was a previous high, right? Because if the market is creating lower highs and dropping, there's no reason that it should be going higher than the highest place that it previously was. If that makes sense, y'all, drop some sevens in the chat, right? Because when I first started trading, this concept was it just sounded crazy to me. And it just sounded repetitive, like lower lows and higher highs and higher highs and lower lows. But when you understand that that's what the market is doing, and you can recognize these drops, right? You can recognize these areas where the market resisted, you'll know that, okay, next time the market gets to this high, I should sell, because this market is going down. In a downward market, it's not going to be creating higher highs. It's going to be creating lower lows. So in this case, we're going to say, and let me just get a horizontal line. You can get a horizontal line simply by getting a paintbrush. Clicking the paintbrush, clicking horizontal line. It'll pop up on your chart. And you just want to put, if you're looking for a sell, you want to put that horizontal line at the previous high, right? Because the market is dropping. So now we can say that if the market gets to, that's pretty high. So I'm going to bring it down because this might be a new high. If the market gets to, and this might be a little high, but we're going to say 231 or higher, right? We're going to get in for a sell, right? Because that's the previous high that the market was. It should not be trying to get higher than that unless it's going for a buy. So 231 or higher, that would be for a sell, right? Now, this is without any indicators. Right now, we're just talking about price action. Once you establish the trend of the market, we know that this is a downtrend. We know that the market is creating lower highs. We're going to use those lower highs as areas of resistance and as entry points for ourselves. If that makes sense, y'all, drop some sevens in the chat. Right? Right? And this is similar to what we talked about before with liquidity, right? Liquidity is the area where you see that there was some resistance. And if you know that there's some resistance, that just means that the market probably is having a hard time getting higher than that and is going to continue to sell. So we have our entry point of 231 or higher. That's pretty high, right? But we're going to see what happens. Because now we have another candle forming. But is this a reversal? Like the market is going to go up, or is it going to continue to sell? All we can do is we're going to wait it out. If y'all been trading with me for a while, y'all know I like to call out one trade at a time. Y'all know I like to take it slow because people get overzealous, and you can always create a support and resistance and trade that zone. But I just be like, I'm just going to do one trade at a time. So right now, our sells are 231 or higher, but we know that if the market goes higher than that, then our next sell will be around 402. So I'll drop both of these in the chat, right? So 402 or higher sell, or 231 or higher sell. And this is still for AUD CAD. I don't want to do a even lower entry point, because whenever you start creating lower entry points, that's when the market start acting up. So we pretty much are just going to be patient with this one. As we can see, it is getting back up there, right? It is getting back up there. Now on my stochastic, it does look like the market is crossing up. So we're going to see if this is an actual reversal or if this is just a pullback to our entry point. I'm not going to give you guys a buy, but if you are on your computer and you are looking at the same chart, then there is a buy entry available, but I'm just not going to drop it yet until we establish what is going to happen. And again, no indicators yet, y'all, just price action. We see the market going up. Right now it's at 140 something. If you take an entry lower than 231, please let me know. We're going to see if it's forming a new low, which I don't think it is. We're going to wait, y'all. All right, it's at 180 something. Let me know if and when y'all get in. If and when you get into the trade. Okay, it's finding some new resistance right there at 188. 188 is the lowest place I would take the trade, but I also know that it's going to push up, so I'm just going to wait. But for you guys who don't like to wait, I always have to remind you that you can set pending orders, just like with Forex. So for pending orders for HFX, you just come over here, you click pending trades. It's already on AUDCAD, but you want to click, instead of by the time, you want to do it by the price, because we know what our entry point is. Our entry point is 231, right? 231. You want to put your entry point here. You want to put your payout. You want to put your time frame, and you want to put how much you want to risk. So let's just say I want to risk $10, and then I'm going to click lower. So it pops up in my current tab. So literally, I don't have to do anything else. Once I find my entry point and I set the pending trade, that trade is going to trigger whether I'm on pocket option or not, right? So everybody should actually go and set that pending order, and we can look at another pair, right? If you need me to repeat how to set your pending orders, just drop a 7 in the chat. If you set your pending order, just drop a 3 in the chat. Okay, I'll wait about 15 seconds because I don't want to go too fast and I don't want to leave anybody behind. I'll drop this in the chat too. 188 or higher for a sell. And I hope this is making sense, y'all. So the entry points we have are 188, 231, and 402. And I'm going to move to the next pair. No, I'll wait because y'all not being responsive and I don't want to go too fast. So I'm going to wait. I should go set those other pending orders. Okay, it's looking like this market wants to continue to drop. Let's see. Does somebody have a question? No? No questions? Okay. Let me make sure everybody is on mute. So right now we're literally just waiting for this market to either get to, it looked like it's going to push up, but we're waiting for either 188, 231, or 402. Now that the market seems to be turning around, I will give you guys a potential buy entry as well. And that buy entry is going to be at all right, let's wait and see if this is our new lowest low. I told y'all most of this is really just patience. It looked like it wants to push back up to 188. If you do take a premature sell, I don't know. We can see. I'll get in, but you guys don't have to get in, just so you can see what will happen if I actually don't wait for this market to actually get back up to the entry point. Because we may have a lower entry, but we'll see in a second. So I got in prematurely just to show you guys, is it worth it or does patience pay? I got in at 103. This looks like a new resistance. Okay, again, I'm not in profit right now, which is expected. It's fine. It happens when you don't wait. But that's why I'm here to show y'all. So were you guys able to set the pending orders? Were you not able to set the pending orders? So this trade is not going to clear. Okay, good. Thank you. Thank you for letting me know. Because sometimes I'll be breaking up and I won't even know it. But as we can see, based on what I was just telling y'all about the trend, this is obviously a downtrend because the market is still having a hard time getting past a previous point that we set before. That just goes to show you that the trend is very strong. We can tell by the amount of red candles. Again, we can tell by the shape. We can see that to use the stochastic, guys, I wasn't using it because we're not using indicators right now. We're just pretty much going off for price action, but I'll just move on when the market gets to that point. It will get to that point. So pretty much we just went over a sell example. So for a buy example, it would be the opposite. So I'm just going to go back. I'm going to scroll back. And I need to find a clear buying trend. All right, so here's one. Well, yeah, it's HFX, so it's fine. So we're going to look right here, y'all, where we see all these blue candles, right? So if the selling trend is distinguished by the slope going down and more red candles, then okay, good. Your pending trade triggered. Awesome. I don't even know where the market is right now. Let's see. Where did you get in? 188?
I think that's what I started at.
Okay, good. Well,
yeah.
Mine's didn't trigger because I put mine's at 231. I'm trying to go back to this buy example. So pretty much what I'm trying to say, y'all, is the buy will be the opposite. If you know that the market is going up and it's creating higher highs and higher lows, then your entry point for, oh, clear, good. Then your entry point for the buy is going to be where the lowest low was, right? And it's the same thing for Forex. If the market is going up, right, and it's a buying trend, the market is not going to pass the last low. That it just shouldn't happen. So that's why that's going to be a good place that you want to take your entries. So I'm happy that you cleared that trade. Okay, my trade should be triggering in a second. That 231, I don't have to do anything else because I set the pending order, but we're going to see what happens. We can see this market is pretty much struggling to get up there. We do have, I'm going to take 188 and I'll see what happens. I'm going to take 188 again since it's having a hard time. I missed it, but if y'all did take the lowest entry point, then right now you will be 1-0. And please feel free to ask questions. Today's session is literally specifically just about being able to identify the trend and understanding that those higher highs or those lower lows that are created are going to be the entry points that really drive your trades. And that should really make it simpler, right? You don't have to struggle to find your entry point. You just have to figure out where was the last high, right? Where was the last place that this market seriously resisted? And we can look and we can see this was the high that it was resisting before. And now we can see it's creating the new resistance right there. So yeah, it's still dropping. The same entry point still stand 188, 231, 402. Right? Let's see if we can get even lower. 118, right? 118 or higher. I'll give you guys a new entry point we can get in for a sell. And right now,
hey, sorry, I got in late. You used MEA?
I'm sorry, go ahead.
I said, hi, sorry, I got in late. Are you just using MEA, the moving average? What, I can't see.
Well, no, right now I'm not using any indicators.
Okay. Sorry, go ahead.
No, it's okay. I'll do a quick recap from the beginning because I didn't say that much. I just repeated like what I said. So the reason why we're looking at sells right now with AUD CAD is because this market is currently in a selling trend. And the ways that I like to identify the trend, like I like to make trading very simple for myself. The ways that I like to identify it, I like to just be able to look at it. So visually, if I can see that this market is facing down, which it is, that's going to give me a bias towards being a seller. And then if I can also see more red candles than blue candles, which I can right here, that's also going to help me create a bias to be like, okay, no matter what's happening, I know that I want to focus on sales. Now, it comes to finding your entry points when you understand how being able to technically identify a trend works. So we can visually identify the trend by the shape and the colors, but the technical part says this is a high, right? This is a lower high, right? Because it's still the highest point on this candle, but it's lower than this high, right? So this is a high. This is a lower high, right? And then this, right? This is a lower high. This is a lower high. And it's a lower high because out of the little zigzag pattern, it's the highest point. And then as the market is selling, right, this is why it's important to be able to identify a trend, technical and visually. As it's selling, it's creating lower highs. If I know that this is the next lower high, that will be my entry point for the sell, right? Because if we're selling, the market shouldn't be creating higher prices. It should be creating lower prices. So the last place that it resisted essentially would be, that's where I'm setting my entry points as I'm describing it to y'all. So that's why we were taking the sales on AC based on the market going down and creating lower highs. Does that make sense? Let me know if that makes sense. Okay. You can unmute yourself or just drop sevens in the chat if that makes sense. Because HFX is fun and it's simple, but we always got to go back to the basics and remember that it's always going to be about support and resistance. It's always going to be about the trend, right? Unless you're trading off of reversals, it's much easier to go, okay, good. I'm glad it made sense. It's much easier to go with the trend, right? So we cleared. If you guys cleared at least one time off of AC, just drop a 7 in the chat, right? And we're just going to move on to another pair just so you can know that what I'm talking about is not specific to just this pair, right? And also so that you can see that every pair won't have a clear direction. Like we can clearly see this is selling. Now it's like, it always makes sense in retrospect, but I'm going to move on to another pair and I want everybody to move along with me, right? Let's go to, I don't like CHF. Let's go to AUD USD. We're going to go to AUD USD. And when you guys get there, you can drop AU in the chat or you can drop a 7 to let me know that we are all on the same page. Okay. Okay, I'll give you guys about 5 more seconds for a few more people to get to AUD USD. It's okay if it's OTC. We're looking at the OTC pairs, everybody. Okay. I'm going to move right along. So this is a good example of a buy, right? And again, I'll just take off my stochastic oscillator because I'm not using it right now. Right now, we're strictly trading off of price action. I will teach different indicator pairs just so that everybody's not going to trade the way I trade. Like you guys know, I like to use moving averages, stochastic momentum. If even, that's pretty much it. But I'm going to continue to just drop different indicator pairs because I had to learn at least 25 indicators before I settle on which ones made the most sense to me, right? But even without the indicators, you guys should be able to look at a market and see what the price action is and be able to get in confidently, right? Because the indicators are only confirming what you see. They're not bringing up anything new, right? Like it's not magic. It's just like, okay, this market looks like it's going up. Now let me just figure out where's the best place to buy. So this is actually a good example. This market looks nice too, because just based on the shape, right? First, we're going to do it visually, and then we're going to do it technically so we can find our entry points. So visually, right, I see more blue candles, right? From what I can see on my screen, if you guys see more blue candles than red candles, just drop a 7 in the chat. So we have the blue candles, which is letting us know, okay, that this market is buying. I see more blue than red. And then I also see that the slope is going up, right? So those are my visual indicators that, okay, I will want to look for buys in this market. Like, I know the market is selling right now, but don't let that give you anxiety because it's all going to come together, right? The theory is all going to make sense. So we see it going up. Now, just how if we're creating, wait, I need to move this out the way. Just how if we're in a selling market, the market is creating lower highs and lower lows, right? If the market is going up, the market is going to start here. So we're going to say this is a low. And then we're going to say this is a higher high. This is a higher low, right? Because it's still a low, but the market's going up. So now it's creating higher lows, right? So then we have another one here. We have a higher low, right? And we have a higher high. So because we already can establish where these higher lows are based off of where the wicks are, right? Because the wicks are showing you where price is being resisted, like, oh no, I don't want to go any higher, or where the market is being supported, where it's like, okay, I actually am comfortable with this price and I can go higher than this, right? So since we have a level of support here, right, and we can tell by the wick, if the market comes down to this line, that would be a potential place where we would get in for a buy. You guys can see it was looking a little scary, right? It was looking like, okay, I'm just going to keep selling. I'm going to drop. I'm going to be dramatic. But based on what the market has already done, and based on the way that we know the market is going, right? Not what's happening now, but based on the way we know it's going, we already have a potential entry point for a buy, because if the market is going up, right, it shouldn't be getting lower than the previous place that it was. Well, we're going to go by this one. It shouldn't be getting lower than the previous place that it was. So we're going to figure out what this entry point is, and we're going to get in this trade for a potential buy, and we're going to see what happens, right? We're going to put horizontal lines at places where we see strong support. So we saw strong support here. We're going to see. And we also saw strong support here, right? And I'm only knowing this by the wicks, right? If you have a hard time figuring out where price is supported, where price is resistant, just look at the wicks. Literally, if you have a million lines on your chart, it's better to have a bunch of potential entry points than to be confused and set on one, knowing that the market is fluctuating, right? So in this case, it's looking like if the market gets to, and I'm going to drop this in the chat as well, if it gets to 353, or, well, it looked like it may be finding new support where it is, but we're going to see. It may be supported. Yeah, right there. It just formed a new level right in front of our eyes. But I'm going to drop both in the chat. So I'll say 443 or lower, we can get in for a potential buy, right? And I'm saying that because that's the last place we see a wick, right? Remember, if price is going higher in a buying market, it shouldn't be creating lower lows, right? That,
look at the bottom of the wick.
yep,
Like
you want to go to,
tip.
say that again?
You're saying you're looking at the absolute tip of the wick, that little tail.
Yes. Yep.
Yep.
Yep. You want to look at that because the candle tells you 4 things about the price. It tells you where price open, where price closed. It tells you the low and the high. That's what the wick tells you. Like the body tells you where price opened or closed, depending if it's a buy or sell. The top of the wick tells you the absolute highest that it went. The bottom of the wick tells you the absolute lowest that people were willing to sell to, right? They were willing to sell to right there. So with HFX, it's a great for your entry points. With Forex, it's just a different story, because it's just a different story. So we got one entry point, 443 or lower. That's based on the lowest low. And then we have another one I'll put in case the market decides to be disrespectful, right? Which it does sometimes. I'll even go even lower, 353 or lower. And you guys can create as many potential entry points as you want based on how many levels you see, because you know the market is going to be going up and down, right? If you guys have ever, no matter what, HFX or Forex, if you guys have ever gotten into a trade and you thought that it would never revisit a place, but then it actually went back to that place, drop a 7 in the chat, right? Because the market repeats itself so much. It's really not a matter of if this is going to happen. It's a matter of when this is going to happen, right? So we have our 2 entry points, and now we just going to wait. This market looks like the first one, what I say, 443 or lower for a buy. We're going to see, but even if it drops past 443, we already know where it's going. So we're going to wait a second. You guys can set your pending order, or it looks like it's coming down now. Let's see. Because remember, you only need to be 1 pip above your entry to clear or make money, right? It's looking like it's going to go all the way down. All right, there we go. 443 or lower. I got in for a buy. Let's see what happens.
What
Someone
time
have a
frame?
question?
Oh, I'm sorry.
No, go ahead.
But I see you have it for a minute, right? So I mean, what time frame is your screen at? Like you're looking at 30 minutes or something?
No, I'm looking at my candles are on M5 and my time frame down here is H7. Like, okay. So if you guys were able to get into this trade at 443 or lower, just drop a 7 in the chat. It's real close. It's very close, but we're going to see what happens. I don't even know where I'm in at, but it's in profit. Oh, out of profit. We're going to see what happens because we know what the next entry point is. I still have not a lot of time. I don't know how I got into this trade so many times. All right, it's a close one. We're going to see. It's a close one. Very close. Let's see what happens. I did not clear, but I'm okay with that. It was a close one. I don't know why I'm in for the sell. I don't know where that came from. So, guys, you probably did not clear that trade. But we know that the next entry point is 353 or lower. But let me know how it turned out. I don't know where you guys got in. If you took it lower, if you took it higher. But for me, that trade was a lesson, and I'm okay with that. Right? Because we see this market as being finicky. Right? And oh, another thing, a 441 lesson. Okay, yeah. Yeah, because we see another thing happening. Kevin, tell me. Well, I don't know if Kevin, if you would know, but tell me, does anybody know why we lost this trade? We talked about this before. I feel like somebody knows the answer. Lower lows, but are being made, and the structure was broken. The structure was broken on the downside. So
what does that mean?
All right. It means like the market is always, I'm going to draw it out actually. I'm going to draw it out. 1 second. Let me get this pencil. So pretty much the market is always doing this. So we see it was going up. It was going down. It sold. We expected it to buy here, sell here. We expected it to buy here, but it sold. So structure was broken right here. It didn't do what we expected it to do. It continued to go down. So it looks like now the market is going to our second entry point. So I hope that makes sense, y'all. Structure was broken. So now we can potentially look for sells on this trade, since we know now that the market wants to go for a sell. Remember, the market's always going to be going up, down, up, down. But if structure is broken, then we know it's going to continue to, now we know it's going to continue to sell. If that makes sense.
So if the structure is broken, you can go in for the sale instead of the buy.
Exactly. Because structure is just that we know that the market is going to buy at this place and sell at this place because that's what it did in the past. But once it breaks out of that pattern, we know that, okay, now this is not just a pullback. This is actually a reversal. So this market may not be going back up. It may actually continue to sell down to our previous points. So The next entry point that you can sell at is 353 or 230. Just based on what's happening here. So we did the buy example didn't work out, even though the market is now going back up. So it's okay. We was a little bit out of profit, but that's okay with that trade. But before we move on, do you guys have any more questions? Or any questions right now? Just about the trend, where to place your horizontal lines. Yes, no, maybe so. Okay, no questions. So yeah, this market, again, it does look like it's going up. We could have put a line there. Oh yeah, it was 353, but now we actually see the support here. So now it will be 414 or lower for a buy, because it probably will continue to go up now, right? Now that it has another level of support right there, but we can see, or you guys can set your pending orders. I would call the next entry at, well, it looks like it's gonna consolidate here. So this is about, I would say 415 or lower for a buy. And I would say, I really don't want to give any sells because this market, I do believe is going to continue to go up. But if it was potentially going to sell, I would say 587 or higher for a sell. But just based on the way that the market is going overall, y'all, I would probably focus on buys. So 414 or lower for a buy, 587 or higher, potential sell, but focus on buys. Focus on buys, y'all. So we did one buy example. We did one sell example. Do you guys have any questions? And is it making sense? Overall, if it's making sense, drop a 7 in the chat. If it's not making sense, drop a question mark and we will do another example. Okay, good, good. Oh, hey, Teresa. I did not know you was here. Okay, good. Okay, good, good. Everybody said it's making sense for the most part. And just whenever you take a loss, like, just don't be upset about it, because you can see that, yes, the entry point was a little bit off, but the overall analysis wasn't wrong. Like, when you're trading, this is where a lot of people mess up. They change their strategy. They just keep changing stuff just because they lost one thing. But if you still kept the original analysis, you still kept your original entry points and everything, you will see that the market is going to do what you thought it was going to do. It just didn't do it when you thought it was going to do it. So like we just said, it's not a matter of if, it's a matter of when this is going to happen. So I just want everybody to understand that and not be discouraged if a trade is lost. And again, this trade looked like it might even go past 586. So don't sell, y'all. Don't sell. Don't sell. Don't sell. Don't sell. I take that back. I'll get in so we can see what would happen, but the market is actually pushing up. This may be the new level of support, but we're going to wait and see. The new level of support will be 500 or lower. But if you were to sell at 586, I'm going to sell. Let's see what happens, but I'm pretty sure the trade is going to continue to buy. So 586 or higher. I'm just waiting for a little bit higher. Or you can test it out. You're supposed to be using a demo anyway, but I'm going to do it just to show y'all. It's risky. But it looks like it's going to continue to buy. Come on, give me 586. All right, there we go. All right, so I sold. Don't sell, y'all, because it's going to keep pushing up. I sold at 591. And the market is going to continue to push up. So again, that just confirms our initial analysis of the buying trend, which is good. So we'll do one more currency pair, y'all. Let's just do Euro USD just for the road. And then we are going to transition to our Forex lesson. But it's not going to be too long. We're just going to look at some trade ideas for the week. And then you guys can ask any questions that you have at the end. I do want to know how everybody trading plan is going. If anybody needs to have a one-on-one with me this week, I'm pretty available. Let's see what's saying in the chat. Okay, cool. So we're gonna go to, oh, that 586 trade was real close. Yeah, the trades are gonna be taken in MT4, but we're gonna do the analysis on TradingView. So we're gonna do a little bit more trend trading right now with Euro USD. And then we're going to transition to our Forex lesson. But again, it's not going to be a full lesson. We're just going to be doing a live analysis to figure out our first trades for the week. So Mr. Lewis, you can we can talk after class if you have time, just so we can just get you caught up with everything you need to know about the class or everything you want to know. So guys, the last pair we're going to look at for today is Euro USD. So once you guys get to Euro USD, just type EU in the chat or drop some sevens. Okay, perfect. All right, I will give you guys about 15 more seconds to get to the currency pair just to make sure everybody is caught up. Okay. Okay. So we're on Euro USD OTC. Everybody, it's the OTC version of it. And we're going to do the same thing that we just did on the other two pairs. Now, if you do want a strategy and you want to use indicators, I do have the double EMA stochastic strategy, which is pretty simple, but right now is about helping you understand price action, right? Because you should be able to see this without the indicators, because sometimes the indicators lag and also indicators really confuse people. Sometimes the indicators are doing something, the candles are doing something else, and you end up not taking any trades because you're so confused, when the basis of those indicators is, we missing so many cells right now, but the basis of the indicators is for you to understand what you're looking at, but you should be able to do that without the indicators. So the first thing we're going to do is look at Euro USD, and we're going to figure out what the trend is. Now, this market right now, even though it's selling heavily, I see equal blue candles and equal red candles. It's no clear direction in this market. And that's something Euro USD is good for. It's always doing everything at all times. So you will find some trade opportunities, but you do need to be a little bit more precise. So when something like this happens, right, where you really can't determine like what is the direction just based on looking at it, that's when you want to set up your support and resistance straight up. Like, sorry, y'all. This thing won't disappear. All right. So we're going to want to set up our support and resistance. So we can see that the last candle, well, let's go from here, right? We want to put our horizontal lines where we can see the resistance previously was, right? We can see resistance was previously right here, right? We can see that the market tapped it, and then it sold. And then the same thing happened over here. It tapped it, and then it sold. So even though this is pretty high, my screen looks frozen. But even though 134 seems pretty high from where the market is now, we still know based on previous price action that that is a strong area of resistance. And I'm going to just refresh this, y'all, because pocket option seems to be freezing right now. Right. It's always important to look up support and resistance, but especially when you can't clearly see what's going on. Like, you can't just eye it. You really want to use your horizontal lines. Like, take notes on your chart. That's essentially what all these things are for. So I'll put a line right there. because that's my area of resistance. And then I'm going to put a line down here, right? Why? Because I see support here. I see support there, right? And you can put as many horizontal lines as you like. I recommend having more than enough is better than not having enough, because at least you always know where's the next potential place that this market will go. So we see that resistance is actually starting to be informed on this candle, right? So we can even put another horizontal line right there. I feel like if you're confused and you think it's resistance, just put the line there, right? So right now, and let me make sure I send this to the chat, our current potential sell is going to be 054 or higher, right? And that's because we're coming off of a strong selling trend. Remember, guys, we're thinking about price action. We're coming off of a strong selling trend. Price is still being very resistant, right? We have a strong body red candle. If the market comes back up to this point, 054, that's going to be a potential place for us to sell, right? Now, typically, this green line will be where we will buy, but Mr. Lewis, you asked earlier, this is an example of breaking structure, right? This market just broke past this structure, which is a place we thought it would buy. So now that confirms again where we could sell. So now,
broke past 0.4.
Huh?
It broke past the 0.54.
Well, it broke past where this line is right here.
Okay.
I put this line here because this was a place where it was buying in the past. But because it broke past that line, it broke the structure. So it's not buying there. It's going to potentially continue to sell. Does that make sense?
Yeah, I didn't know how far over you were looking, because I was, yeah, it makes sense.
Okay. If it don't, let me know. That's why we're here. So now we have some more, and you guys can see in real time, this market, it broke past that point, but because that was such a strong area of support before, it's having a hard time getting lower than that, right? It's having a hard time breaking the structure, but it really wants to continue to sell. So we have 962 or higher, right? Well, we can literally physically see right now the market keeps pushing off that point, 962 or higher for a potential sell. And we know that the market, the next place that the market is trying to go, because it's in its heavy selling energy, it should be trying to touch this line right here, right? If this is confirmed, right, and it broke structure, which means it's going to continue to sell, we should expect this candle to get all the way down to 859 in the next 5 minutes or so. So we can sell at 962 or higher, right? Well, any place for a sell is actually the way this thing is selling, but it's always nice to wait for it to revisit your entry point. 962 or higher for that sell. That's what we're waiting for, guys. If you want to be risky and just take advantage of the momentum, for example, if I just get in for a sell, the market could continue to sell because we know it's going to do that, or it can get back to my 962, right? It can get back to that 962. So yeah, we're going to see what happens with this trade. It's trying to get down to 859, guys. That's what it's trying to do. So let me know if you guys are going to take the trade based on the momentum, or you're going to wait for it to get back to the entry point. Don't ask me what I recommend, because when you trade by yourself, you really going to have to make a conscious decision. Like, do I take it? Do I wait? Right? And we can even move this line down. Right? Y'all see that little wick forming on this candle? That's just showing you that that's some resistance right there. So we could have a even lower entry point, 909 or higher, right, for a sell. We're just, oh, that trade cleared, good. So now we just going with the trend. So now we're either waiting for a 909 or higher, or we're waiting for a 962 or higher, or 054. So let me know if you guys are waiting or taking the trades, taking the sells on the way down. Sometimes you got to use discretion. But it looks like if this thing, look, it's about to pass 859, y'all, just as, it's not even as predicted, it's as where that line is, right? And then if it goes even lower, is going to try to get to this low, right? Which is 785. So now this can be an area of resistance. Anytime you see a little wick, no matter how small it is, that's a potential entry point. Seriously, because price is having a hard, is struggling. Okay, so that's our 900, 909 entry. Yep, it's breaking again, exactly. And now it's going to break, and you can literally see it breaking structure. Like the market was here. It was doing this. Wait, where's my pencil? It was doing this, then it was doing this, this, and you would expect it to do this and then come up, but it wants to actually go down, right? So now the market is trying to get to 785. So now, and this is something y'all should be noticing too, as the market is breaking structure and selling, the previous areas of support are becoming resistance, right? So now where 859 was a place to buy, 859 is a place to sell because this market is going crazy and I wish I was in on MT4. So, okay, clear. That looks like a clear face, I hope. That looks like a clear face, Kevin. All right, y'all. So I dropped, okay, good. So I dropped a few entry points, but pretty much all the numbers I called out, if it was previously a support, but it's still selling, is now resistance, right? That's one thing about Forex and HFX that makes it simple. You always know what the market is going to do. You just don't know when the market is going to do it. Like, I'm not making these numbers up, 859, 785. I'm not making it up. It's the previous place that the market was, right? So just like earlier, I said, if the market is buying, is going to be creating higher lows and higher highs. If it's selling, it's going to be creating, like Kayla said earlier, it's going to be creating lower lows, right? So this was the previous low. It broke structure, right? This was the previous low. It's currently breaking structure right now. So we can wait for it to get the back to 859 or higher, or we can try to take advantage of the momentum as it gets back down to 785, right? So let's see what happens. I'm going to see if it gets back to 859. I'm going to get in for a 1-minute trade, and I might get in a few times as it goes back down to 785. Since we know it's in a selling trend, we know the momentum is high, and we know that's where it ultimately wants to be, right? So hopefully this is making sense, because sometimes I feel like I just be saying a lot of words. And I don't know if it be clicking, but y'all said it clicked. So does that make sense, y'all? When you're looking for your entry points, you're just following the trend to figure out what was the last high or what was the last low, right? So we just gonna wait for this last trade. Oh, look, if we zoom out even further, we can see even further where it might go, right? We have even more entry points where it might go. So
yeah, I guess that's what my question was. How far do you zoom out to get your support resistance? Like are you looking like a 30-minute, hour, like a half a day, or to see which way the market's going?
I just zoom out as far as I can see clear structure. But then once that structure is broken, it's like I have no other option but to see like where is it going to go next. So for the first few minutes, it was fine looking right here. Even right now, the market is staying in that zone. But once it breaks past that line, it's like I have to figure out where is it going. So I'm just going to zoom out and figure out where's the next low. So the next low I have is at 594. And then I have another low at 489. So yeah, I just really zoom out as much as I need to. Because right now, look, it looks like the market is about to turn back around, right? It looks like now it wants to turn back around. So unless it keeps selling, we don't really need to zoom out because now our resistance has become our support, if that makes sense. So now 785 or lower will be for a buy since it's starting to pick back up. And it's just going to cross all of our points again. And then 859 or lower will be for a buy, and so on and so forth. Once it starts to switch. So let's see. If we do 859, I just did doing this for example. Now that it look like it's going up, if we do 859 or lower for a buy, I just got in off the basis of the trend is switching. So now that wasn't my resistance, it's my support since the market is going up. Does that make sense, y'all?
Yeah, so if you lose because it broke the structure, you can catch it on the other way around. It's kind of what I'm thinking.
Exactly. That's why it's important to I always encourage everybody, like before you really start trading, just come in here, take a few minutes to put as many lines on your chart as you can see. Because once you do that, no matter how many hours or days go by, these lines will always be on your chart. So you can spend less time doing your analysis when you trade because everything's already on the chart. Like I don't have to do anything else. Now I know that once the market gets to, what is it, 909 or lower, which is now, I should be able to get in for a buy. But that line is already there because I already did the analysis. It's just, are we going up? Are we going down? What am I visually seeing right now? Good, y'all? All right, awesome. See, this would be my 909 or lower. So let's just see if I get in now. Is it going to continue to push up based off of the market going up now? Where did I get in? I got in at 906. So let's see. Let's see. But yeah, y'all, this was our HFX lesson for the day. Hopefully y'all learned something and you'll be able to take this with your trading. I want you to continue to practice this if you want to do it today, if you want to do it tomorrow. But yeah, let's see what we actually did record wise. You guys can drop your records in the chat as well. And let me know how many wins you have, how many losses you have for the day. 1, 2. Mine really don't count because I was just demonstrating stuff. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. All right, so that's like a break even session, but it's okay. It's whatever. So yeah, guys, this session is recorded. I am going to drop it in the chat within 24 hours. Y'all know if y'all have questions about it, y'all have my number. You can always text me, send me screenshots, ask me questions. Drop questions in the chat because your fellow traders are always there to help you and to answer your questions as well. Hopefully y'all made some money. If not, hopefully you walked away with some education. We are going to start doing these sessions again every Sunday, but we'll alternate between Forex first or HFX first, right? I always ask y'all, but just to keep it interesting. So next week we'll do Forex first and we'll do HFX second. Does that make sense? All right, awesome. So I'm going to actually stop this recording so that it can process and do that. We're going to look at some trade ideas for Forex, and then we're going to call it a day, y'all. It's not going to take too much longer. You're welcome. It's not going to take too much longer. We probably can still be done by 7:30. Oh, I meant to say stop recording. It's still recording.